Where do you see the S&P 500 in the next 10 years? This is a question that many financial enthusiasts are asking. Take a moment to ponder on that question, will you? It's not just a trivial inquiry, it's a question that holds the potential to shape your financial future. Whether you're a Wall Street veteran or a novice investor just dipping your toes into the waters of the stock market, the answer to this question is incredibly relevant. You see, the S&P 500 isn't just any index, it's a broad representation of the US stock market and the economy as a whole. It encapsulates the performance of 500 of the largest US companies, the economic titans, if you will. It's a barometer of economic health, a thermometer taking the temperature of the financial world. So, when we talk about the future of the S&P 500, we're not merely discussing the trajectory of an index. We're peering into the crystal ball of the American economy and, by extension, the global economic landscape. The performance of the S&P 500 in the next 10 years can provide us with insights into economic growth, market trends, and investment opportunities. It can guide us in making informed decisions about where to put our hard-earned money. Now, predicting the future is always tricky, especially when it comes to something as dynamic and volatile as the stock market. However, understanding the forces that shape the S&P 500, the trends that have driven its past performance, and the factors that could influence its future, can help us make educated guesses. Remember, the future of the S&P 500 isn't just an abstract concept. It's a reality that will impact everyone, from the CEOs in their glass towers to the everyday folks looking to grow their retirement nest egg. We all have a stake in the future of this pivotal index. The S&P 500 is a crucial tool in the financial world, and its future is essential to understand. So, let's embark on this journey of discovery together, as we delve deeper into the past, present, and future of the S&P 500. But what exactly is the S&P 500 and why is it so significant in the stock market? Well, let's dive right in. The S&P 500, or the Standard & Poor's 500, is a stock market index that gauges the performance of 500 of the largest companies listed on stock exchanges in the United States. It's not just any list, it's a powerhouse of the country's most substantial and influential companies, from tech giants to healthcare leaders, retail behemoths, to energy titans. The S&P 500 was introduced by Standard & Poor's in 1957. Yes, this esteemed index has been around for more than half a century, and during this time it has become a staple in the financial world, a barometer that financial aficionados, investors, and even casual observers use to gauge the state of the US economy. Now, you might be wondering, how does this index work? Well, it's not as complex as you might think. The S&P 500 operates on a market capitalization-weighted index, where the weight of each company is determined by the total market value of their outstanding shares. This means that companies with a larger market capitalization have a greater impact on the S&P 500's overall value. If a titan like Apple or Microsoft sees a significant price change, it will have a much larger effect on the index than a smaller company. And this brings us to the crux of why the S&P 500 is so significant in the stock market. Given its wide coverage of various sectors of the economy and its focus on the largest and most influential companies, the S&P 500 is often seen as the most accurate measure of the performance of the US stock market. It's not just about individual stocks, it's about the bigger picture, the economy as a whole. So the S&P 500 isn't just about numbers and tickers on a screen, it's a reflection of our economy, our industries, and our progress. That's why when the S&P 500 sneezes, the market catches a cold. So the S&P 500's performance can give us a snapshot of the US market's overall health. To predict where the S&P 500 might be in the next 10 years, we need to look at its performance in the past decade. In the realm of finance, the S&P 500 has been a beacon, guiding investors with its steady light. Over the past 10 years, this index has seen its fair share of ups and downs, reflecting the dynamic nature of the global economy. Starting our journey in 2013, the S&P 500 was on a steady climb, recovering from the global financial crisis of 2008. This upward trend was facilitated by a robust US economy, low interest rates, and a surge in the tech sector, with companies like Apple, Amazon, and Google leading the charge. However, the path wasn't always smooth. The index took a significant dip in late 2015 and early 2016 due to China's economic slowdown and falling oil prices. But the resilience of the S&P 500 shone through as it bounced back, reaching new heights by the end of 2017. The year 2018 was a roller coaster ride, with the index hitting an all-time high in September, only to experience a sharp drop towards the end of the year due to fears of a global economic slowdown and rising interest rates. But the S&P 500 proved its mettle once again, rallying in 2019 and continuing its upward trajectory into 2020. But then came the black swan event no one saw coming: the COVID-19 pandemic. The index took a nosedive in March 2020, reflecting the economic shock caused by the global health crisis. Yet, the S&P 500 recovered remarkably quickly, driven by unprecedented fiscal and monetary stimulus measures, and a boom in tech stocks as the world shifted towards remote work and online services. These past 10 years have shown that the S&P 500 is not just a reflection of the US economy but also a barometer of global economic trends. It's influenced by a variety of factors, from geopolitical events to technological advancements, and from monetary policy to global health crises. These past trends give us some insight, but predicting the future of the S&P 500 also requires considering other factors. What factors could influence the future of the S&P 500? Let's dive into it. First, we have economic trends. The S&P 500, like all markets, is sensitive to the ebb and flow of the global economy. Economic indicators such as inflation rates, interest rates, and gross domestic product growth can all impact the performance of the S&P 500. A strong economy generally tends to boost corporate profits and investor confidence, which can drive the S&P 500 upward. Conversely, an economic downturn can lead to reduced earnings and lower stock prices. Next, we have political events. The policies implemented by governments can have a profound effect on the S&P 500. Think about the impact of tax reforms, trade policies, and regulatory changes. For instance, a shift towards more protectionist trade policies could hurt companies that rely heavily on international trade, potentially leading to a drop in the S&P 500. The third factor is technological advancements. The rapid pace of technological innovation can disrupt existing industries and create new ones. Companies that are able to adapt and capitalize on these changes can thrive, while those that fail to do so may struggle. As such, the success or failure of companies in adapting to technological change can influence the trajectory of the S&P 500. Lastly, we have global events. Things like geopolitical conflicts, pandemics, and climate change can all have an impact on the S&P 500. These events can create uncertainty, and as we know, markets don't like uncertainty. For example, the global pandemic in 2020 caused a significant drop in the S&P 500, as lockdown measures led to a sharp contraction in economic activity. The interplay of these factors makes the future of the S&P 500 far from predictable. Each of these elements, economic trends, political events, technological advancements, and global events, can have varying degrees of influence at different times. And it's not just about the individual impact of these factors, but also how they interact with each other. These factors make predicting the future of the S&P 500 a complex task. So, where do we see the S&P 500 in the next 10 years? Well, peering into the future of the financial markets is no easy task. But let's put on our visionary hats and explore some potential scenarios for the S&P 500 in the next decade based on current trends and potential future factors. In the short term, we might expect to see some volatility. The world is still grappling with uncertainties such as geopolitical tensions and the after effects of the pandemic. But remember, volatility isn't necessarily a bad thing. It can create opportunities for savvy investors who know when to buy and when to sell. Over the medium term, the next 3 to 5 years, we could see the S&P 500 continue its upward trajectory. This is based on the assumption that the global economy will continue to recover and companies will grow their earnings. However, we should also be prepared for potential bumps along the way, such as interest rate hikes or unexpected economic events. As we look further ahead, into the latter half of the next decade, it becomes harder to predict. Many factors could come into play, such as advancements in technology, changes in government policies, or shifts in consumer behavior. One thing is for sure though. Innovation and adaptability will be key. Companies that can harness new technologies and adapt to changing market conditions are likely to thrive. Now, it's important to remember that these are just predictions. The actual outcome may vary. The future of the S&P 500, like any financial market, is influenced by a multitude of factors, many of which are unpredictable. That's why it's crucial to stay informed, be flexible, and have a diversified investment strategy. So, while we can't predict the future with certainty, we can certainly prepare for it. The S&P 500, with its broad representation of the US stock market, will undoubtedly remain a key barometer of economic health and a vital tool for investors. Regardless of what the future holds, it's clear that the S&P 500 will continue to be a vital tool in the financial world.